You want to get funded guaranteed, and you want the exact entry model to get you that funding? In this video, I'll give you exactly that. To do this, first, we'll go over how to get funded guaranteed and how to choose the correct prop firm. Then I'll give you an exact entry model you can use to get that funding. After that, I will show you how that entry model works on the charts with recent examples. No time to waste, I'm putting an all-nighter here. Make sure you stick to the end, because especially at the end, I'm dropping the secret sauce that put everything together. Let's get into it. How to get funded guaranteed. Step 1, the starting point. Start with getting 5 challenges of your preferred size. For example, get 500k challenges. Your initial investment will be around $2,500. If you don't have $2,500 to start with, then you can start at a lower threshold. Doesn't matter. For example, pick 5 10k challenges, pick 5 5k challenges. That will set you back like maybe $100 or $200. This first starting point is very important, and you should be okay with losing this initial investment. If you don't have the money to play with 4 challenges, I recommend the following. 1. Start with the smallest, cheapest possible options, 5 or 10k challenges. And if you don't have the money for the smaller challenges, then you have work to do outside of your trading. A very important note here. I would recommend, when you don't have the money right now to buy 5 new challenges, don't go any further. You have work to do outside of the charts. Why? Your trading will be more emotional and unstable because you treat this as a lottery ticket, which is not. It's trading business. You should take it very serious, and you should be able to lose the money you put into this trading. And maybe you're wondering, why 5 challenges? Why not 1? The rules of prop firms are stacked against you. So with 5 challenges, this way you will be able to spread out the risk of your trades between multiple accounts. And why prop firms? You wonder why not. Your personal capital, because prop firms have a higher upside and a lower downside. With a higher upside, you can get easier funding, for example, 10, 20, or 100k, without spending your own 100k on your trading. And the downside, when you use your personal account and you have, let's say, 5k on a personal account and you blow that account because you had a bad day, can happen, you make a mistake, then your downside is the 5k. But what if you have a challenge of 5k, which is only a couple bucks? Then the only downside you have is not that 5k, but only let's say the 50 or 100 bucks you spent on that challenge. Downside is smaller, upside is bigger. It's a no-brainer to play prop firms. That's step 1. Let's talk about step 2. Buying the challenges. What prop firm to choose? And I make a difference between 2 types of prop firms. 1 is the futures prop firms. Currently we have Apex, Topstep, MyFund Futures, and the non-futures prop firms like FTMO, Alpha Capital, Funded Next, the Fivers, also referred to as the Forex prop firms. And on the Forex prop firms, you can still trade the Nasdaqs, the indices, the one you trade on the futures. When you are not funded yet, pay attention here. Focus on non-futures prop firms. Why? Once you're funded, it's easier to get a payout on non-futures prop firms than on the futures prop firms. And to make this clearer, I make this depiction for you. So you have the non-futures prop firms like FTMO, Alpha Capital. Going from not funding, the challenge stage, to funding is quite hard. It's quite hard compared to the futures prop firms, where it's quite easy to get funding. But what you want is the road from funded to payout to be the easiest as possible. Make the challenge hard, but once you're funded, once you pass, you celebrate, let's get a payout very quickly. And with the non-futures prop firms, it's very easy to get a payout. On the futures prop firms, it's very hard to get a payout. So that's why I recommend going for the non-futures prop firms route at the start. After a few weeks or a few months, when you're funded, you have some payouts. Of course, reinvest them back into the futures prop firms to play around, but try to play this game on easy mode. Trading is hard enough from itself. Just try to stay with the non-future prop firms. And a note here, when buying your 5 challenges, I would recommend spreading them out on at least 2 prop firms. Can also be more, whatever you prefer, at least 2. Don't buy them all on 1 prop firm. You never know if they have a surprise bankruptcy. Past couple of years, some prop firms went out of business all of a sudden. You don't want to have all your eggs in one basket, lose all your funding in one day. For example, you have 5 challenges, buy 2 FTMO, 2 Alpha Capital, 1 Funded Next. Maybe by the time you're watching, these prop firms do not exist anymore, but this whole concept applies to every prop firm out here. Second example, 2 FTMO, 3 Funded Next. You can mix and match as long as you don't have all 5 challenges on 1 prop firm. And now let's take a look at how to choose the correct prop firm. And I use a website for this. It's called propfirmmatch.com. And I'm not affiliated in any way, shape, or form with this website. I think they're doing a great job of determining which prop firms are legit and which one are not. So when you go to their homepage, propfirmmatch.com, you see here the prop firms popular, the Fivers, Alpha Capital, the ones I traded myself as well. But make it easy for yourself. Go here to filters, and what I would recommend filtering on is your country. So for example, some people from the United States are not welcome at all prop firms. So make sure you choose United States. most important, I would say, choose the assets. So if, for example, if you're trading stocks only, look at here. If you want to trade Forex, filter here. Also very important, the platform you want to trade on. If you are very familiar with MetaTrader, for example, pick MetaTrader. If you have never heard of MetaTrader and you want to pick CTrader or NinjaTrader or Tradeovate, you want to trade more on TradingView, fine. Pick the platform you are most familiar with. I would recommend as a trader, be at least familiar with MetaTrader and trading on TradingView, for example, with Tradeovate. But CTrader, DXTrade, NinjaTrader, all are very good platforms. You can even filter on the type of steps you want, 1 step, 2 steps. I would recommend going for 2 steps on most prop firms. You can also do 1 step. That means you can pass challenge in 1 phase instead of 2 phases. But keep in mind, most prop firms have extra tricky rules with the 1 phases. For example, it takes longer to get a payout. You need to have minimum trading days or some form of weird consistency rule where you're forced to make extra trades. And remember, you want to play on easy mode. The less rules from you funded to payout, the better. And once you pick your prop firm, for example, the Fivers, you can go to the website. I think if you click here, you can go directly through the prop firm you want, FTMO or whatever prop firm you choose. From there, go to the website. And then please do your research. And with research, I mean, go to the website. For example, here, Alpha Capital. Again, I'm not affiliated with any of these. But before you buy anything, go through their rules. So for example, here you see the rules. For example, you want a 2-step for 100K or for 5K. And you see, okay, this costs $50. Perfect. You need to have 10% profit target for phase 1, 5% profit target. These are the max drawdowns. Makes sense, but go deeper. Don't be lazy here. Every single prop firm has some form of FAQ or form where they go more in depth about their rules. So here you go to Help Center and here you see FAQ, click on it. Research this. And yes, those are many articles and most prop firms work quite similar, but I will go definitely through the different articles here. So for example, the alpha plans, this is the 1-step, this is the 2-step. For example, the 2-step, and I want to know everything. Okay, these are the phase 1 targets, phase 2 drawdown. But what do they mean with the drawdown? Is it trading drawdown? Is it static drawdown? How does it even work? Well, another page showed up here. All explanations about the drawdown. I'm not going to bore it with these details right now, but look at the examples. You don't want to be caught off guard here. While you think you're trading according to the rules, but it's very clear on their page that you're probably doing something wrong. Be prepared, do your homework. It's your money and your freedom we're talking about. Make sure you put in the work. And the nice thing about this is you only need to do this once per prop firm. So this will take you maybe 10, 20 minutes to go through some articles and read something, take some notes. Perfect. And if you're not sure during your trade, go back to the same page or type in, for example, can I trade news on Alpha Capital, for example, and then the FAQ page will show you all the details. Also the max lot size exposure. For example, if you did not read this and you buy a 5K account and you're shooting 3 lot size on it, Alpha Capital will just send you an email like, hey, on our FAQ page, it's very clear that you cannot trade with more than 2.5 lots. You did, so the profits you made with this trade are now invalid. So you took that amazing trade for nothing. Do you want to be in that situation? I won't like that. I think you don't like it too, so might as well do our homework here. Same with rules as weekend holding, trading news. Make sure you do your homework. So when you decide which 2 prop firms you want to trade on, let's say Alpha Capital or for example FTMO, from there you can pick them, register, read the rules, buy a challenge, and get to work. Cool. Now you know what to do. Step 1. Buy 5 challenges. Step 2, where to buy it. I would recommend non-futures prop firms. Where can you find them? Look at Prop Firm Match and do your homework when buying them. Make sure not all your accounts are exactly at one prop firm. Make sure you spread them out for at least 2. Now let's get into the nitty-gritty part. And it is step 3, getting to the first funding milestone. And the goal is very simple. You have those 5 challenges. Don't aim to pass them all. Just aim for 1 or 2. Even 1 out of 5 is awesome. Perfect. Aim for 1 out of 5. Personally, I aim for 2 out of 5. And of those 1 or 2, I want for at least 1 to get a payout in that account. Get a payout of at least 2% profit. So for example, you have a 100K account, 1 trade, wants to risk to reward with 1% risk, 2% of 100K is 2K. Most of the time you have an 80-20 profit split with the prop firm. So with a 2% profit, 80% of that is in this case $1,600. With a 10K account, it's a payout of $160. And with that $1,600, with a payout or 160 or whatever payout you have, that's awesome because now you have money to get new challenges and you can stop putting your own money into challenges. It's a waste of your money. And please promise me right now, following. Do not do this. At the end of X time period, I am a funded trader. I'm finished with my challenge of getting 10K funded or 50K funded. You have zero control over how long it will take for you to get funded account. That's out of your control. What is in your control is where you put your stop loss, where you put your TP, where you enter, what your lot size is, when you take a trade, if you journal your trade, if you have actual data, do you have a trade plan? Do you have an entry model that actually works? And I'm gonna give you my entry model later in this video. But focus on the things you can control. When you finish the challenge, you have no control over, because even the best trade strategies can stop working for maybe a week or two. So if you are in a unavoidable losing streak, which you will get into someday, and you start your challenge, you're like, oh, well, I took a few losses, this doesn't work, but I said to myself, I'm going to get funded at the end of this month or the end of this quarter, and you didn't hit it. Who cares? Who cares? Don't do it. Focus on the things you can control and let the profits come to you. No rush. Just focus on taking good trades. When focusing on good trades, reviewing good trades, and actually intentional improving, that's all you can do. And that's what you need to do to become a profitable trader. Some of you watching this will pass the challenge in a few weeks. Some will take months. There's no competition. And I bet some of you will beat me in my challenge. And I applaud and support you to do this. So maybe we start a challenge at the same time and I do 3 weeks to finish a challenge. But you are taking amazing trades. You're doing everything right and you pass in 2 weeks. Of course, you won the competition of speed. I applaud you for it. Get funded fast, get payouts fast, get rich fast. But it's not a competition, it's not a rush. Take it easy, focus on things you can control. And if you beat me with speed, awesome. But don't gamble, this is no race. The goal is for everyone to win. And I don't care how long you take. And don't try to be too fancy with your trading. And what I mean by that is the goal is to get to around 35% win rate. So you can shoot for 1 to 2 risk to reward and up to get funded and to make money. And this is what so few people understand. When you shoot for a 1-to-1 risk to reward, you need a 51% win rate to be profitable. With a 1.2 risk to reward, you would need a win rate of 34% to be profitable, because 1 out of 3 need to be profitable. With shooting 1 to 3 risk to reward, you would need 26% win rate to be profitable. So when you shoot 1 to 2-ish, 1 to 2.5, for example, risk to reward, and only aim for 35% win rate, you're good. And most of the time, when you focus on good trades, you have a higher win rate than 34%. And maybe you don't shoot 1 to 2, but maybe you shoot 1 to 2.4 or 2.5, which is good. Try to match your win rate with your risk to reward. So if you know you have a 34% win rate, which you can track because you can journal your trades, you know, I can only shoot for 1-2s and I'm good. I can make money now. Awesome. Aiming for 35% is very nice because your trading becomes very forgiving. Gone is all the pressure, right? Because for every 10 trades, you can take 6 losses. That's pretty awesome. And even better, for every 100 trades, you can see 65 times your stop loss being hit. And even then, you're not losing money. That's a pretty good deal if you ask me. And this helps a lot mentally, where so many traders struggle when going through a losing streak. Now let's talk about how to pass phase 1. Pro tip, play prop firms aggressively because you want to be rewarded for winning trades. Don't be the I risk 0.25 or 0.5 risk per trade kind of person. Keep that kind of trading for your personal account, but not for prop firms. For phase 1, aim to pass in only 2 trades. So if you have 2 winning trades in a row, it should complete your phase 1. If your target is 10%, you should aim for 5% target per trade. And how you can do that? You shoot 2% risk per trade and you aim for a 1 to 2.5 risk to reward. If your target is 8%, aim for 4% target per trade. You can shoot 1.5% risk per trade and shoot a 1 to 6. And you can play around with this according to your own preferred risk to reward and win rate. And the 2.5 6-ish risk to reward fits perfectly in the 30% win rate frame. Cool. Phase 1, gonna pass that. Let's go to phase 2. Phase 2 should be a 1-shot, 1 kill. And most pro firms have a 5% target on the phase 2. So that means you shoot 1.75 risk and you aim for a 1 to 2.85 risk to reward, or which I prefer, keep shooting 2% and aim for 1 to 2.5, similar as you did right here on the phase 1. And with 1 winning trade, you pass the challenge. So in an ideal scenario, and this is where I want to come back to play prop firms aggressively, you should be able to pass an entire prop firm challenge in 3 winning trades in a row. If you're not taking all 3 in a row, that is fine because it's very forgiving. You have 5 challenges. If you lose a trade, that's okay. That's only a -1. And most prop firms have a -10% drawdown rule. So let's say you risk 2% per trade. You can lose 5 trades before losing that account in a row. And if that happens, that's bad luck, or maybe you didn't trade very well. But I'm sure when you shoot for your 35% win rate and you shoot for 1 to 2 and up, you should be good here. And from this point, the game plan is clear. It's all about showing up every single day, hunting for opportunities. I'm gonna give you my entry model in the next part, and you can use this entry model every single day to hunt for opportunities. It's a very easy model. Focus on making very few mistakes. And what I mean with making fewer mistakes is maybe you now blow 3 accounts per week. For next week, don't try to become profitable in 1 week. Instead of losing 3 accounts, aim for losing 2 accounts. Yes, you're still losing, but it's 1 less. The week after, you're not losing 2 accounts, but aim for only 1 account. Yes, you're still losing. Yes, it still sucks, but you went from 3 losing accounts to 1 losing account. And the next week, aim for losing no accounts. Try to go for break even and use these little milestones as momentum to become profitable, but don't try to change it all at once. And that's what we want. We want to get rich quick, but that's not how trading works. If you suck right now, it's okay. Everyone sucks at the start, but try to suck less over time. Go from 3 losing accounts to 2 to 1 to break even, and then start building slowly and steadily. And the easiest way to do that is by focusing on making few mistakes. So you take a trade, you take a loss, which is normal. Usually you might re-enter, a little tilted, but now you decide, no, I'm going to close my trading view and I'm going to walk away. Perfect. That's focusing on fewer mistakes. Or maybe you never journal. Maybe it's good to maybe journal your trades once in a while to say like, hey, I took trade X, Y, and Z, and I think next time I can do these kind of trades way better. Awesome. Intentional improvement. Well done. Then you're making fewer mistakes. You go from a 3 account to 2 account, or 2 account to 1 account. You start going towards profitability very soon. And remember, the first funding takes the longest. After that, scaling will go quick, because you reinvest your payouts in more challenges and you repeat the process. And also on identity level, the first funding takes the longest. Maybe you're now in a stage of your trading career where your identity is, I am not a funded trader yet. But the single time you will pass a challenge, your identity shifts. Even if you lose that account right away, you now are a funded trader. You are able, you believe that you can pass that challenge. So even if you lose that account, you now know on an identity level, that's the core value, that you can pass a challenge again. So the first funded account will take the longest. And why not buy 5 accounts on a good prop firm, aim for 35% risk to reward, which is very forgiving, and play the prop firms very aggressively. Yes, those are the 4 steps we just went over. And now it's time to show you an entry model, the exact entry model that passed my first challenge ever years ago. And I'm very happy to share it with you in detail. Let's go to the charts. And here you have it, the Skool model. And the Skool model is the easiest entry model you will ever find. It's named to the website we are hosting our group on Skool. And let's go over the steps one by one. First step is a daily or weekly high or low being swept. So in a bullish example, it's a low. In a bearish example, it's a high. Then the second step is a market structure shift on the 5 minute. And how you can recognize a market structure shift in a bullish example is the last swing low that took the high. If that is validated here at the red line, you have a market structure shift. And in a bearish example, you see when the last low that took the high is violated at the red line, you have a market structure shift. Step 3 is enter in the fair value gap that made the market structure shift. Target is 1 to 2, ideally towards a opposing 1 or 4 hour fair value gap. So if you're familiar with the external range liquidity, the old highs and lows to internal range liquidity, their fair value gaps, this is exactly that. So your target is a fair value gap. You go from a high to a fair value gap. You go from a low to a fair value gap. Stop loss ideally below the low or above the high. And it would look like this on a long example, and it would look like this on a short example. Now let's go deeper into the charts to see some examples of this happening. Here we are looking at AUD USD on the 1 hour chart, and we see that we swept this Monday high. So we have the first step of a daily high being swept, also a weekly high being swept, and we see a rejection coming in from there. Well, we're looking for an opposing array. We're looking for an opposing fair value gap. Here we have that 1 hour value gap. Now let's drop it to the 5 minute time frame to see how we can frame an entry around this. So here you have that same price action, but then on the 5 minute. So we have a sweep here, then we start breaking down lower, and here we have that fair value gap. We actually have 2 fair value gaps. When you have 2 fair value gaps, my strategy is to take it in the first one and allow my stop loss to be at least covering the other fair value gap as well. So let's say you take your entry right here. Your TP is going to be in the fair value gap for 1 to 2. And here we are covering your value gap. We can also, officially you want to do it at the high, but I don't want to take 1-to-1 risk to reward. So I'm okay with putting my stop loss here above the fair value gap, because that is the area that should hold. And let's see what price gives us. As you can see, we are almost stopped out here. So it's good that we allow price to come back into the fair value gap, even the upper one, before going to take profit. And you see how small the trade is. This is like a 3-point stop loss, 5-point risk to reward. And after that, as you will see, it will go even lower. That's the magic of waiting for highs and lows on the daily and weekly to being swept, because there's lots of buy side liquidity being taken on this move. And that means that price just grabbed a bag of liquidity, a bag of money, and now it has the power to trade lower. It has money to do that. And here we're looking at silver at the 1 hour time frame. And as you can see, we just swept Monday high. Also, we swept a weekly high right here. So there's lots of buy side liquidity being taken. We have an opposing array. That's his 1 hour bullish fair value gap. And now let's drop it to the 5 minute to see if we can find the Skool model. So we are here in New York session and we start displacing lower. And here's where you might feel FOMO. But let's see what we have here in this price action. We have a fair value gap here on the 5 minute. We also have a small volume imbalance right here. So you can take your trade from this volume imbalance or from this fair value gap. Ideally, I just want to take it from the fair value gap. Target is right here because we only need a 1 to 2. This is an ideal scenario. We can just put our stop loss all the way up here. This is a very nice stop loss. A stop loss like this will make sure that you have a very high win rate, because price can even go up one more time and then go to the target if the target is meant to go there. And that's very nice. You are not victim to the liquidity sweep before the real move, the turtle soup. And that's very nice. So let's see what the candles do here. Price comes here, tags the fair value gap, and then starts breaking down lower. And even if you have missed this one, look at how clean price is after that. So let's say you missed this one. Then from this 5-minute fair value gap, you have another fair value gap being created as a reaction, which is nice. So you could take another entry if you missed this one right here, same target, 1 to 2, and you would have made the money as well. Now the third example, we are looking at the Euro JPY at the 1 hour time frame. And we just swept the Monday low, and here on Tuesday during the New York session, we sweep the Monday low and start moving higher. And when you see that, you know it's time for a Skool model. We have two opposing arrays here, two 1 hour fair value gaps, because this one is very close to this price action. I don't think we can get a 1 to 2 out of there, so I want to target the upper one this time. Let's drop to the 5 minute to see what we get. So here we have that same price action on the 5 minutes. We sweep the Monday low here, and you see here we have aggressive sells, aggressive buys, and here is where we break structure. So we want the candle that breaks structure to be the fair value gap to take the entry. So here's the entry. Our TP is going to be that top fair value gap for a 1 to 2, and it will be right here. And now let's see if we can get an entry. So price is very aggressive. It goes to the target. Let's see if we can get an entry. It goes back. This is nice. So now we're waiting, we're patient, but we see the price goes to the target without us. And it sucks, but it's all part of trading. You will miss a lot of moves. You can get stopped out before a real move. And this is an example that your bias is good, the Skool model is there, but you just cannot get an entry here from this 5 minute time frame. And what you then can do is look at maybe other time frames to see, like, okay, in hindsight, what could I have done differently? Maybe I can adjust or nuance my entry model a little bit here to get an entry. And what I like to do is zoom out one time frame. I like to go from the 5 to the 15 minute to see if I could get an entry. So here we have that marker shifts on the 50 minutes right here. And there we have a fair value gap right here. And also one right here. Now I'm going somewhere more advanced here, but with two fair value gaps here, why do we not trade to this one? Because we have a breaker sitting right here. The up close candle here, that's a breaker. So here we already have a fair value gap and a breaker. It's called a unicorn setup. So price does not need to come back in that bottom fair value gap. So next time when there is a breaker on this fair value gap, I'm okay with taking it in the first fair value gap here on a 15 minute, stop below this fair value gap to again target a 1 to 2. But it's in hindsight, and I think you should be okay with missing some moves in the process. And this entry model, the Skool model, will appear somewhere on one of the pairs every single day. You just need to look for them. And as the next example, we're looking at EuroCAD on a 1 hour chart, and we just took the Wednesday low here on Thursday during the New York session, and we start going higher. At that point, where are the opposing arrays? We have a 1 hour bearish fair value gap here. So let's drop it to the 5 minute to see if we can find an entry. So here we're looking at that same price action on the 5 minute. So during the New York session here at the open, aggressive sells, aggressive buys. Breaking structure is right here. So there is where I want to pay attention. We have two fair value gaps here. We already tapped here into one, but this is not the entry for me. I want to take my entry once structure is broken here. With two fair value gaps, I like to take the first one, allow my stop loss to trade into the other one. Well, with this target, we can have a safe stop loss here for a 1 to 2, right here below the low. And let's see what price gives us. What I'm seeing here as well is failure swings, the staircase effect. But for now, let's make it very easy. We have a daily low being swept, the Wednesday low. We have a market structure shift on the 5 minute. We have an entry and a fair value gap, targeting an opposing 1 hour array with a stop loss below the low. Textbook Skool model. Let's see if it gives us a win. It moves away, comes back to the entry. Don't be the person that puts their stop loss to break even when you have a few pips in profit. Let it ride. Take that loss when it doesn't go your way. It's okay. And price moves higher towards the target. Listen. If you made it to the end of this video, you're clearly a person who is serious about improving their trading. When I first started out, I lost a lot of money trying to do everything on my own. But I realized that when you have someone next to you to guide you, someone who is already been in your shoes, you can make the most and fastest progress. If you're one of the ones watching this video, so I'm soon closing my mentorship. So you watching this video, you're one of the ones that get in before I close. I'm only accepting 10 more people before it closes. I've managed to help many people become successful, like Skool, who's getting consistent 5K payouts every single month, or Rogerio, who went from blowing accounts to consistent payouts, or Muthio, or Lorianne, or Destiny, or Karel, or Konstantin. Every single one got their first funding and made them already consistent payouts. And now I'm giving the opportunity to you guys. So if you're interested in learning more, click the link in the description for more details.